Okay, so let's do a market recap for March 18th. It's been a bit since I've been able to do these market recaps. It's because I've been busy recording a course on just the system that I follow and some of the basics that I was. A few people reached out to me that, these stock market recaps that I'm doing. They're super helpful, but they want to learn how to do it themselves as well. So that's kind of the basis behind that course. So I'll share the link once it's ready. Should be ready by end of this week. But regardless, let's get back to the stock market recap. So what we have today, March 18th. So before we get on with the market recap, a few things have shifted since our last analysis. Our last analysis was close to the beginning of the month, and the most important thing that had happened between now and then was the CPI. And CPI and PPI came in hot, or hotter than expected, because of which interest rates took a little bit of a turn. So we had, if we take a look at TLT, earlier in this month, we had TLT moving up, right? There was kind of that, it looked like it could possibly start to trend up, which would have been really good for some of the equities and some of the sectors that we were looking at, including TAN, solar, IWM, those kinds of things. But last week after the CPI announcement, also last week was quad witching, a pretty volatile week with just moves all over the place. But yeah, the main takeaway was that the inflation has not fully cooled down yet, which means that Fed may not be ready to start cutting interest rates as soon as the market expects it. I think there's a high probability, 60-70% probability that the market is pricing in a rate cut for June, no longer pricing in for March anymore. March meeting is mid this week, so in 2 days. So the market's not pricing that in. The most of kind of the eyes and kind of price action would be based on what Powell would say about a possible rate cut in June. And just the fact that we had a hotter reading for PPI and CPI means that the likelihood of him agreeing or even hinting at a rate cut from my perspective is quite slim. And before we kind of proceed further with this video, I just wanted to remind you that the disclaimer that this stuff that I'm discussing is for information purposes only. It's not advice or recommendation to buy any stocks or securities or sectors. Please do your own due diligence before making investment decisions, as there's a lot of risk associated with that, as you have learned already. So coming back to kind of a macro overview, my thoughts are that Powell is pretty conservative on saying anything about rate cuts, and so it's unlikely, from my opinion, for him to say anything about cuts. So we got to start thinking about a possibility that there might be interest rates going a little bit higher. So TLT going a bit lower here after that weekly bar that we saw and the hotter readings that we saw for this week, until we get a change in sentiment or a change in price action that shows otherwise. Okay, so we got to position accordingly. Now let's just see what the price action is telling us. All right, so for XLC, with the largest weight being Meta, and Google had some good announcement today with having some partnership with Apple on the AI front. So that is helping this, and it has been in a tight consolidation. We've been watching this consolidation and is starting to kind of peek its neck above that consolidation area. We are on the weekly chart, so it would be prudent to wait for that weekly close to see where that is, if we are able to get that breakout of a close, or if we fall back down. And I mean, either is quite possible because we have a volatile week. Today is an NVDA conference after close, and then on Wednesday is the FOMC. So yeah, so keep a watch on this. I will move this to a green. TAN is coming up next. Solar we have looked at before, and it was looking like it is going to start doing better with the rates coming down. But now with the thesis changed, with new data that we've gotten on the hotter than expected CPI and PPI, one confluence factor has gone down and one research factor is pointing against this kind of recovering at this point in time. Although this RSI divergence still exists, kind of would take like more of a wait and see approach now on this, and wait for the interest rates to figure out which direction to take. So this gets demoted from a green to a neutral. QQQ, we can see that it's just kind of been hugging that 5-week and grinding up, as we call it, right? So slow movement up, but it is not giving up that 5-week yet. Last week looked like that close was not very pretty, and what was below that 5-week and got rejected at that trend line. But this week we are so far back above that 5-week to start the week. So still in kind of neutral territory. It feels a little extended, but there's no signs yet for a sell-off or a kind of consolidation. It's just kind of slowly grinding its way up. IYZ, this is telecommunications. It felt like after this 3-week consolidation, we could have a breakdown here. But this week so far, it's kind of picked back up and right into that resistance area. So definitely not a buy point at this point, but is it a shorting kind of sector to short? No, because that price is not confirmed that it wants to go lower at this point in time. So this is also in the neutral territory. SPX. So SPX has just been grinding higher and higher and higher ever since that October low came in place over here. Let me see if I can draw. Got a fancy new drawing pad. Let's see if, kind of works here. I'll have to get used to this, but yeah, so this was the October low, and ever since there's been that grind higher, and you can see that 5-week over here. It's just not giving that up, right? So it is maintaining that 5-week all the way through. And so far, even last week with the volatility, it was able to maintain and close above that 5-week. So that would be, the first thing to look at for a possible breakdown here in different sectors. And S&P, SPY, similarly, just not giving up that 5-week yet. XLY, consumer discretionary, actually had a decent move up with Tesla bouncing off some critical levels. Not sure if that's going to sustain or not, but we're still below that 5-week. But like if you look at what happened here, we almost touched this area, in which this is area that we designated because of gaps and just a lot of transactions here on the daily chart. And it found buyers just above that, and so far it has been kind of trending higher. There was these 2 weeks where there was some strong selling, but seems like it's picking back up. The first thing to note would be that cross of the 5-week moving average here. So I would like to see the cross of the 181 here to start. But XLY, a possibility of a turn here. I just moved S&P. I don't know why that was yellow. That is still in the green because it's above the 5-week. So we could actually move this to a green. But actually, green designates a buy signal from my side. So I just find it, it's too close to that upper trend line here to buy. So we'll just actually leave it as a neutral for now. Yellow means caution. So here we are still kind of below that 5-week. So we'll still keep it at yellow, but it is in developing area, so developing area or caution area is the what I mean by the yellow sign here. XLK actually looks quite decent to start the week here. And this is the technology sector. We had a kind of rejection last with a long wick coming in, but last week was a crazy week with quad witching and FOMC and all kinds of stuff. So kind of give it to that it's still kind of maintained and hugged pretty closely the close to the 5-week moving average. And this week it's trying to contest that, and we would like to see that break above that 5-week in XLK. So far, this is also a caution for now after those 2 weeks of selling, because it could pretty well find resistance here and sell lower, right? So developing sector or a caution sector for now. Okay, so SMH, everyone's favorite sector these days. Let's take a look at what's going on here. So in SMH, we have not lost that 5-week. You can see how extended we got here at the 240 mark. I think that was the inclusion of SMCI in the S&P and good NVDA earnings and all that caused that kind of just super hyped up movement in SMH. Now it's kind of cooled down, and it's resting on that 5-week moving average. Finds itself at a very critical point with NVIDIA, an NVIDIA conference coming out after the close, right? So it could very well bounce from here. I know a lot of people are expecting this to break down, but it could very well bounce from that 5-week and continue the trend. So far, price has not confirmed one way or the other. This I'm moving to a caution or a developing sector because it is in a possible buy point at this point, believe it or not, right? It depends on conference and how the FOMC goes, but definitely this would be the sector that pushes through with a lot of volatility this week. Medical devices. So this was interesting. So I mean, I felt like 2 weeks ago, it felt like one of the strong sectors has broken out above these previous highs, but it has found sellers last week, and this week it started the week below that 5-week moving average and has not been able to take that 5-week and move up yet. So far in this week, this is still a cautious sector. It's no longer in the green because it is below that 5-week, and with the rest of the market doing putting in a decent bounce today, the bounce in this sector was not as impressive so far. This is the weekly chart, so we could kind of give it more time as the week progresses. Maybe this shows itself as still a possible strong or trending sector, but so far it remains in the cautious territory. XLB has a different story. XLB has been kind of breaking out and moving kind of up very strongly since kind of February. And we are a bit extended from that 5 weeks, so we could see a bit of a check back, but it doesn't have to. XLE energy really kind of pushed through and had, even though it was a bit extended, today was finally got a little bit of a breather here. But same thing could happen in materials, right? And so yeah, this remains kind of in one of the stronger sectors that we are seeing at this point in time, materials. IJT is the small cap growth. I'm not very impressed by the movement going on here. Honestly, it's just too much price action, too many sellers sitting in this area. The easiest trade would be for it to wait and let it get through this mess here. And it could do it in 1 week. It could do it in a couple weeks. Who knows? Or the sellers take the best of it and break it down. It's just not. I'm not going to put it as a developing area at this point. It's just there's easier trades out there to take. IYR has been interesting to me. I really thought this could make its way higher here with that breakout of the flag. but it has seen consolidation. I could possibly see it coming back to this this strong support. I think this is the 200-week moving average. So with the interest rates moving higher now, with that strong PPI, that's what caused this kind of movement down. If that reading was a bit cooler than expected, I could have seen that this could have probably broken out here, the real estate sector. But now, for now, this comes back into kind of a cautious area. Still not breaking down yet, but with that change in the interest rates direction, we just got to be a little bit more cautious about things that are more sensitive to that. So solar, IWM, MDY, IYR, these are things that are interest rate sensitive. XLF still has a good trend. I like it. It's broken above those previous highs. It's really nicely hugging that 5-week. Honestly, I don't have any complaints yet about XLF. And you can see the other moving averages trying to catch up now. The 20-week is at the bottom of this support area that we had previously marked. So I see good things happening in the financials. So definitely keep an eye on that. MDY, not in a bad place, but the only thing, like, the price action is not confirmed yet. I do still prefer this trade to the IWM, just because of popularity of IWM is too much. So there's a lot of traps. There's a lot of intraday volatility. Your stops get, you get stopped out, and then the price pushes right back up. You can see a much cleaner chart compared to IWM, and the thing that's pointing a little bit against the movement up here is that interest rate move. But the price action is not showing any concerns yet, and I really like how it is consolidating here into that 5-week moving average. So a breakout here could start and keep trending this higher. I still like it as a sector. The only reason why I'm thinking of making this a green is because of that interest rate movement, but price action is not confirmed that yet, so it is still one of the stronger sectors that we have. XLI, again, a stronger sector. All that volatility that we saw last week, it's still just maintained that 5-week, and it's still doing that this week. Remains as one of the stronger sectors that we see. ITB, home builders, a little bit of a different story. Had a bit of a sell-off and coming back into that 5-week. I just feel it feels a little tired, and I wonder if this is kind of a false breakout. Not one of my favorite sectors, and that's why I'm not in CIN. But price still has to confirm that movement. So I mean, it's just 5-week is still being maintained. I could see a possible deeper pullback coming. If not, if it pushes through, then we'll have to relook at the thesis here. XRT is quite interesting to me. It's still doing what it should do, which is holding that 5-week moving average. Not shown any signs of a breakdown yet. It is above those previous highs. Maybe it's just making its way through some of this resistance. But so far, the price action looks pretty decent, right? And remains a green. A possible breakout here could move this up to a cyan. XME, I was a little hesitant about this move. First of all, it was extended, and then we came back and tried again and failed. So this still remains in caution because it's just not showing enough strength to get above that. Once the price gets above this, these rejections where it has had multiple rejections and starts to trend above that, that's when you could relook at XME. So it would be prudent to kind of put an alert out at this breakout zone. Just got to keep in mind though, like the market is not as strong as it was when we started the year, so you got to kind of treat breakouts with a bit of caution here. The strength in the market is a little bit weaker to support breakouts all over the place. So we've seen more breakouts fail than succeed. Consumer staples is kind of slowly making its way through this resistance zone and making it to that breakout zone, which we're interested in. Not a bad look here, but it's just quite a slow mover. But it's not showing any signs for concern here, and we are pretty close. 75.6, 76.30. I'm going to move this to a yellow because we got to keep an eye now that we're very close to that breakout level if there's going to be a strong movement in the sector or not. Usually this is a slower moving sector though, comparatively. Now XLV, it's a bit of a disappointment. It has been one of my focus areas since the start of the year. If you've been watching the videos, you might know that already. But we are, for the last week and possibly this week, so far below the 5-week moving average, and that just points to me that that this sector might not be ready yet for moving higher. So it might be a consolidation or a deeper consolidation that's needed to do that. This trend, the long-term trend up, is still intact. So overall things look okay, but it's about where you want to kind of position for that next move up. So far it doesn't look ready yet, and maybe it needs more time, or maybe we need to give it to the end of the week to see how we close. Because if we close above that 5-week, then things are going to start looking a lot better. Okay, IWM has been interesting, and it also has been affected by the change in the outlook for interest rates. But we can see the rejection at the bottom of the channel that we had kind of marked here on our charts, which is the kind of heavy trading area from before, from 2021, where a lot of buyers and sellers have previously fought. That price got rejected at the bottom of that level and started to move lower. And once it broke into this trend, this channel that we've drawn, it's just it's a little risky now, because it could start trending lower, especially with interest rates going higher, and possibly make another turn to the bottom of the channel. This would be negated by not only a break of this upper trend line, but also a break of this bottom area that we've marked. And if it starts to trend inside, around the 206, 206.5, 207 mark, starts to trend in here, then kind of the gotta change the assumptions and the hypothesis here. And the still not my favorite sector, because at any point the sellers could come and knock it down. A lot of people are looking at IWM at this point, but yeah, like now that we've broken down into that channel, we gotta just wait and see to see if it has strength. Otherwise, it's just gotta be careful here. So this gets demoted to a red. IYT is the transportation ETF. Not as strong as the industrials have held the 5-week. This broke down a bit, right? And so this gets demoted from cyan straight to a caution because of that big red candle here. Now that we have broken the 5-week, it is going to act as resistance on the way up, that 69.50 mark. So we got to wait and see if it breaks above that and maybe consolidates and starts to move above that. That's when we can look into transports again. But at this point, it is in the cautious territory. GDX, not bad of a look, and it got some kind of breathing room for it kind of screeching higher here. And it is this was resistance at the 50-day, I think. Yeah, 50-day or 50-week resistance that it is hovering above. It's a little bit of a messier chart, so a trade should be positioned accordingly with smaller sizes. If you're going to get into this, you could expect more volatility. And gold miners in general are not doing as well as gold is doing. For some reason, the miners are not producing enough results as the gold chart is. All right, let's see. XLE. XLE has been an area of interest. The move last week made it a little bit extended on the weekly chart, but still looks like a decent kind of a double bottom type base, and then move up. I can see this moving up to possibly the 100 mark where it could see some resistance, and that is about a good 10% away here. So XLE possibly can come and recheck that 89 mark sometime this week, but that would be a possible buy point. Again, this is not a recommendation to trade it, but you know, just discussing support and resistance levels for education purposes. Stays in the cyan color. IWC, not as clean of a chart, but not also a the worst looking chart that I've seen. It is just not breaking out and going sideways so far. This does not get any color because it is not a developing sector. It's not a buying point per se. You know, it is at support, but it hasn't shown signs of if it wants to break down or break out here. And the moving averages are not aligned properly, you know, so the 200 moving is here, 5-week is just pointing sideways, and 20 and 50 are below the 200, so not the best setup that we have out here. XBI, another big disappointment. We had a possible breakout, but that 200 week just got the best of it, and sellers just boom, 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 pushed it lower. I wonder at this point, the 50-day, if we move to the daily chart, you can see is also supporting it here. The first step for XBI is to retake that 5-day and have it start pointing up. That would be, you know, just at least the first step to a possible turn here. 50 days usually a strong support, but if we do break below that, you could see XBI moving lower. We do have some support at the 89 level. A breakdown from there could possibly put it around the 82 level. So all in all, from here, it's a possible 12% drop if things get ugly in the market. So this is definitely not green anymore. This moves to a red. And if we get a bounce and move up above the 5-day here, then we could start looking at moving this to a yellow sector. And finally, KRE, not an area of interest at this point. It just looks like sideways with the moving averages all jumbled up here. So a little bit of a longer video. It's been a while since we've looked at the sector, so I had more to talk about, and we had a little bit of a macro talk in the beginning as well. So hope that was helpful, and good luck this week for NVDA conference. Let's see how the semiconductors react to that, and FOMC later in the week.